Are the markets on the brink of chaos or opportunity? The next 8 minutes will change how you invest forever. Welcome back, financial warriors, to another episode of the Dr. Fred Experience, where I uncover the world's most critical financial upheavals that could either make you a fortune or leave you in financial ruin. Today, we're going to dissect the precarious dance between U.S. stock markets and the evolving financial lifestyle, how they are resisting change, and what that means for your investments. First up, we're witnessing a fascinating plateau in stock futures. The S&P 500 and Nasdaq have just set record highs, challenging the norms of market behavior. According to CNBC, this comes at a time when investors are questioning the sustainability of traditional financial assets. The current market price for the S&P 500 sits at $701.66, edging up by 0.25%. Does this steady climb suggest stability, or is it the calm before the storm? As conventional wisdom suggests, no market rises forever, and a peak often precedes a decline. Yet, understanding what drives these peaks is crucial, because missing the signals now could wipe out your gains. Moving to Nvidia, its shares have dipped slightly, closing at $198.35, down by 0.26%. A minor retracement? Perhaps. But this is where behavioral finance insights come in. Is the market reacting to Nvidia's real-world performance, or is it a result of psychological overreaction from investors hedging against potential future declines? These micro-fluctuations could be pivotal. They shape the trading narratives that big institutional investors might weave into larger strategies, which eventually trickle down to smaller traders. It's not just stocks to watch out for. It's how these trades align with broader financial shifts that influence your lifestyle choices. Turning to a headline stirring controversy in political and financial circles, former President Trump has once again threatened to fire Fed Chair Jerome Powell if he refuses to step down in May. The BBC reports that this warning unsettles the already jittery investor community concerned about the Federal Reserve's direction. A change at the helm could introduce volatility, affecting everything from interest rates to bond yields, which are instruments many of you might be vested in, directly or indirectly. An unanticipated shift here could send ripples across both public institutions and personal portfolios. Remember, in finance, uncertainty is not your friend. But here's a cliffhanger you didn't see coming. Amid this financial turbulence, the FDA is deliberating on lifting peptide restrictions, as detailed by The Washington Post. These changes in health regulations could fuel a new investment wave in the wellness sector. Imagine a scenario where peptides become mainstream, creating a financial environment ripe for innovation and disruption. So what's the hidden market play here that could secure your next profit windfall? We'll unravel it right after solving another financial puzzle in New York City. The financial lifeblood of NYC is also at stake. Building workers are rallying for a strike, an event captured by Gothamist that may leave property owners and tenants scrambling. The ripple effects of disrupted services could potentially stall operations for businesses dependent on seamless logistics. A strike could wield financial repercussions beyond labor disputes, especially in a city like New York, where real estate pressures are omnipresent. If you're invested in real estate or urban infrastructures, these labor movements should not go unnoticed. They could reshape property valuations and rental yields. So, what should you do amid these challenging financial landscapes? And more importantly, what shouldn't you do? The key is maintaining a robust, diversified portfolio. Don't place all your bets on one market or sector. The interplay between unexpected political decisions, potential changes in wellness regulations, and local disruptions like strikes is crucial. These elements could serve as catalysts or hindrances to asset appreciation. In conclusion, your financial lifestyle must adapt to these multiple market movers. Peptides could redefine wellness investments. NYC labor movements could dictate real estate dynamics, and political shakeups could alter market sentiment. It's a dynamic, interwoven tapestry where making informed choices gives you the edge. To not just survive but thrive, remain agile, informed, and ahead of the curve. If you're ready to take charge of your financial future, smash that subscribe button and press the bell icon to get all the latest updates directly. And to keep this conversation going, comment below what your next investment move will be. Until next time, stay driven, and keep making those money-smart moves. Now, let's pivot towards the future landscape of technology-driven investments. As we delve deeper into the 21st century, it becomes increasingly evident that technology isn't just a sector, it's the backbone of every industry. This digital revolution is rewriting the rules of investment, opening doors to opportunities previously unimaginable. Whether it's blockchain transforming financial transactions, AI reshaping customer interactions, or renewable energy redefining traditional sectors, technology is a game changer. One of the most talked about trends is the integration of artificial intelligence into daily business operations. Companies harness AI to glean insights from vast amounts of data, refine their marketing strategies, and enhance customer experiences. As an investor, the question isn't just whether to invest in AI, but how to do it wisely. Consider looking into ETFs focused on tech innovation or diversified funds that include a blend of leading AI firms across sectors. Another technological frontier promising substantial gains is the realm of renewable energy. With the global shift towards sustainability, investment in solar, wind, and energy storage technologies is skyrocketing. While it's tempting to jump on the bandwagon of big names, remember the power of researching smaller, up-and-coming firms with breakthrough technologies. These companies often offer significant growth potential and can redefine market standards. We must not overlook the vital role of cybersecurity. As our reliance on digital platforms deepens, the need for robust cybersecurity infrastructures grows. Data breaches and cyber threats pose enormous risks, making cybersecurity firms crucial for the continuity of businesses worldwide. Companies leading in cybersecurity innovation are not just safeguarding data, but also fortifying their market positions, making them attractive investment targets. Now let's talk about the global economic landscape, an intricate web that synchronizes the rise and fall of markets worldwide. Trade agreements, international relations, and geopolitical shifts heavily influence market activities. With regions interconnected like never before, an informed investor should always keep an eye on international news. Trade policies renegotiated can affect everything from tech stocks to agricultural commodities. Diversifying your portfolio internationally can mitigate risks and offer growth avenues beyond domestic markets. As this whirlwind of technological and geopolitical change continues to unfold, adaptability is the key. Integrate constant learning into your investment strategy. Follow industry experts, attend webinars, read extensively, and don't shy away from seeking professional financial advice. So, what's your next step? Perhaps it's exploring that emerging tech startup, or maybe considering the impact of a new international trade policy on your holdings. Remember, each decision should stem from informed insights rather than speculative impulses. Thank you for being part of this journey towards financial empowerment. Ensure you tap the like button if you found value today. Sharing is caring, so pass this video to friends who could benefit from these insights. Keep those comments coming. Your engagement fuels our content engine. Until next time, stay curious, stay informed, and continue crafting your path to financial freedom. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.